When you're going into earnings season, how do you decide what the guidance should be?
Well, I think what's really important is to be clear on your assumptions. And when I used to be a CFO of a bank, interest rates are super important. And many CFOs got tied up in knots because they weren't clear on their interest rate assumptions. You know, was it the period end? You know, was it the week before when they were getting their script together? Was it today? Yeah. So I think being really clear on what your assumptions are, then you can't be faulted. And I think the challenge obviously is the market tends to forget those assumptions, but that's what gives rise to confusion on the day. And I think we're seeing that with some of the tariff affected companies. They talk about, well, here's our guidance based on this sort of view of the world. You know, clearly the view of the world could be different. And I think that's all you can do. I think internally, or from terms of business management, I mean, all good management should work with scenarios. They don't have one view of the world. So you need to say, well, this is what we think is likely to happen, but we're safeguarding our downside. And Apple's a really good example. Do we really think they can move production within 18 months? I don't think so. So they've obviously been planning for that for some time, and they've triggered their contingency plans. So I think all good businesses internally need to deal with scenarios, but externally give a clear indication of your assumptions and perhaps aim off a bit, be a bit prudent.